Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes. I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. Yeah. But it's a replay of this year. And maybe we've now had 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period. Now,
you mentioned, obviously, the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero. Yeah. And it was because of a pricing error, what I would call a glitch. And it led to what they call auto deleveraging. You've
definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Yeah. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out. Right. That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
Following the Federal Reserve's meeting on December 9th to 10th, 2025, markets moved into a phase of heightened uncertainty as traders debated whether policymakers would lean hawkish or begin shifting toward easing. This uncertainty has been a major driver of recent crypto volatility. A hawkish stance would tighten liquidity and pressure risk assets, while a dovish turn could revive a liquidity-led rebound. Tom Lee, chairman of BitMine and longtime Fundstrat strategist, argues that this turbulence does not reflect a true bear market. He points to structural flows, tokenization growth, and steady institutional accumulation as signs of underlying strength. Still, he cautions that engineered shakeouts and market maker stress could trigger short-term dips before the next move higher. Lee has laid out a bold scenario for Ethereum, expecting a possible pullback toward $2,500, followed by a sharp rally into the $7,000 to $9,000 range by January 2026 as institutional adoption accelerates. On Bitcoin, Lee ties a year-end surge above $100,000 to several catalysts: rising ETF-driven demand, corporate treasury inflows, expanding stablecoin liquidity, improving on-chain indicators, and post-halving supply constraints. These forces, he argues, can outweigh short-term volatility and set the stage for a stronger 2026. Let's dive into Tom Lee's latest interview for deeper insight into his market outlook.
How do you see macro impacting you in the space?
Yeah, macro is actually really a big deal, Chris. Crypto was the first really to sniff out and it's going to be responding to a Fed, right? And if the Fed's remains hawkish and executes policy error, that's bad for crypto prices. That's why it's really important for anyone involved in crypto to understand that what the Fed's going to do is a big deal. I think the Fed is in a very difficult spot because if there wasn't what looks to be as political interference, I think the Fed would be cutting without question now, because bond market is showing future inflation expectations are falling, and that means that if monetary policy doesn't adjust, its real rates are getting tighter. We're actually putting more tightening into the economy. But as you know, the Fed has to make sure its actions don't look like they've been politically driven.
Yeah.
And that, not just the market's perception, right? Because people tend to think of it as, oh, well, this is the bond market or stock market's conclusion. That's not really what I think that what the Fed's concerned about. It's really the integrity of the organization. They have 30,000 or more employees, and each of them is seeing this relentless attack from the White House. So I think to the extent that the Fed governors and the voting members know that it's the morale of the institution that's at stake. So this is why the Fed is even more guarded in their actions and much more deliberate in their messaging, because they don't want anything they do to look politically motivated. And unfortunately, that's been bad for markets, because the markets have interpreted that as the Fed is hawkish. And I mean, they do sound hawkish. So I think it means that there's going to be an alignment in later months when inflation is fallen enough and the Fed can now make cuts where it's no longer viewed as politically motivated. I think for anyone who's involved in crypto for a long time knows this, and so there's many who are new, but crypto has declines and we're not necessarily in a bear market, and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves.
Yeah, you have the meltdown, then you have the melt up. Volatility works in both directions. Before I let you go, any price targets for ETH?
Yeah, I think, in the near term, there is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.